Now let's move to the next topic today, which is financial inclusion. And today we are hosting three great speakers in that space, quite diverse, and I'm really excited about that panel as well. Maybe let's start with a brief introduction to all of them. Professor David Lee graduated from the acclaimed London School of Economics, highly published and cited with his work, including some of the first publications on central bank digital currencies, blockchain, and fintech in general. He's very passionate about using technology and education for positive change and financial inclusion. David is the chairman of the board on the Global Fintech Institute in Singapore and co-chair of the Blockchain Security Alliance and highly popular professor at the Singapore University of Social Sciences. Next, we have Millie Rowett, who is engineering manager at Block. I'm sure that everybody is aware what Block is. That's the big tech company by Jack Dorsey. And part of it is another section is Cash App, where Millie works, working on the Bitcoin team. Millie is passionate about bringing Bitcoin to the financially underserved, as well as fascinated by the technology that underpins it. Millie is based in Perth, Western Australia, and when she's not working on Bitcoin, she loves Dungeons and Dragons and playing Ultimate Frisbee. And finally, we have Eric Lim, a senior lecturer at the University of New South Wales in business school, in the School of Information Systems and Technology Management. He's the fintech and blockchain lead at the university's UNOVA lab and the Fintech AI Innovation Consortium. Eric Lim has been deep into the crypto space since 2015 and has a very optimistic outlook for the future of this emerging industry. Welcome, our wonderful speakers. Are we all here?
Yes.
Great, wonderful. So I just jumped quickly to that quote. That is from the Global Fintech's Database 2021 report by World Bank, saying that about 25% of world adult population, which is about more than 1 billion people, are without a bank account. In most of them are in developing nations. Would you like to comment on that topic from your own perspective, and what brings you, or what excites you about that space of financial inclusion, making a difference? If you would like to share your experience, so that's a good intro start for getting to know you a little bit in your own words, if you wouldn't mind.
Well, okay, Andres, I guess I'll jump in because I can't see the cameras of my two fellow speakers. Maybe they're just out of the view because we're in this particular view.
There's a big screen, so okay, yeah.
Yeah.
Oh, there we go.
Oh, there we go. Yeah, look, one of the things that I mean, I think that the figures is correct in a sense that because I came into this panel and then the last figure that I checked was about 1.3 billion people
Correct.
Who are so-called financially underserved. So I think this is the figure is probably up to date. Now, one of the things that I did was that in UNOVA especially is to basically interact or actually kind of like go to underserved communities in Indonesia to kind of understand the role of fintech in helping the community grow. And we did notice that a lot of these communities, especially in this so-called developing countries, is that they do not have access to a lot of these financial services, and often they actually rely on intermediaries or maybe even loan sharks that actually carries that makes loans to this entrepreneurs in these communities, and the interest rate could be really high, and to the point of being predatory. So those are the things that we did notice, and and that's kind of like reinforced the message that financial inclusion is actually an important thing, especially if we have this motivation to try to lift up these communities, to give them some kind of financial and economic identity.
Thank you, Eric. Millie?
Yeah, I can jump in. Hi everyone, my name is Millie, and yeah, I'll talk a bit about this in relation to my own experience, because my own experience is actually quite privileged. When I look back on it, I had only gotten into kind of Bitcoin and crypto about 3 years ago, and before then, you just don't think about financial, being underserved financially, not having a bank account, because in Australia, you are pretty privileged to have financial security, but a lot of places around the world don't. 25% of the world just doesn't have that. So, when we think about financial inclusion, it's not just getting someone a bank account, because what the actual problem is it's not a matter of access. It's like people just don't have money to put in a bank account. So even if you have a bank account or you're served by an institution, you need money to put in that place. So when we talk about access to wealth, we talk about Bitcoin, even CBDCs in some respect, like access to wealth, removing barriers for those people who face systemic problems, and not just some people like, oh, they just need to work harder. It's like, it's not always about that, right? It's about systemic racism, sexism. Half of that 25% around the world are women who are financially underserved, right? Like, if we want to equalize the playing field, we need to start with wealth accumulation and making the money as easy and convenient as possible to get access to. So yeah.
Thank you for sharing. I will see that the picture is becoming more complex as we are trying to understand why that number is so high. So it's not only access to banks, but not having anything to put into that bank account. David, what is your experience?
Yeah, I think I have 2 points here to jump in. And the first is that we have been talking about financial inclusion for many years. And for years, I think World Bank was trying to bring the remittance, even the simple thing like remittance cost down to below 6%, and they have never been successful for a long time. One of the reasons is the availability of technology. It is not until the white paper of Satoshi Nakamoto that came out in 2008 that really woke a lot of us out that we can try to do as much as we want. You need to have the enablers. But before that, the enablers is just, you need to have a stable communication, you need to have mobile phones, you need to have the education, you need to have consumer protection, you need to have, hopefully, less cost with less intermediary involvement of the intermediaries and so on. But we could never really do it until Bitcoin came around. That gave the idea about peer-to-peer transfer, that you lower the cost of trusted third party. You don't really totally eliminate them, but it started the idea of enabling us to do financial inclusion through the availability of technology. And that inspired a lot of new innovation, like the central bank digital currency, Project Orchid in Singapore, purpose-bound money, and a lot of things that the Australian National Bank are doing. They're all inspired from the white paper from Satoshi Nakamoto. That's one. And also when they talk about financial inclusion, a lot of people just thought that the people in the developing economies, they have no assets. But that's not really true. They don't have digital assets that can be traded. They do have their livestock, they do have their house and so on. So the key question is how to make that transparent and traceable. And again, then blockchain came into the picture and enabled that. And once that's being done, once like a livestock is being tracked, a livestock is being transparent, then the insurance company are willing to come in. And financial inclusion actually is just not financial inclusion itself. It leads to insurance company coming in and therefore lowering the risk of lending to this group of people and lowering the lending costs. So there's a whole series of things that the whole movement of real financial inclusion that now central banks are talking about, trying to bring 6%, which the target they have reached, to about 3% to probably by 2030 is become achievable, all because of Satoshi Nakamoto white paper and the use of blockchain. That's my view.
Thank you for sharing, and thank you for drawing the bigger picture and seeing that actually before you start using your digital wallet, you need to have access to electricity, internet, and have the whole bigger infrastructure, right? It's not so simple, and the fact that Satoshi Nakamoto's paper enabled so many of this innovation and inspired central bankers, that's something great to hear. I would love to hear more of this. I don't know who's gonna convert whom to which side, but that's the topic for today's debate. Looking at financial inclusion from these two tools, should we maybe start? I leave it up to our speakers. Where should we start? Should we start with Bitcoin because it looks like it was first before CBDCs, and then move to Would you like to share your views? And feel free to give a short summary if you feel like it's needed on defining Bitcoin. I believe most of our audience is probably well versed in that, but it's always good to clarify our views. What is your, in your view, the advantage or the benefits of using Bitcoin for financial inclusion? I mean, maybe start with Millie because Millie is directly working on Bitcoin.
Sure, yeah, I can definitely start us off. I'm just going to go ahead and throw a simple definition of Bitcoin, just maybe for people who are coming at this from other cryptocurrencies, or maybe this is, your first ever blockchain or crypto conference and you're still, working out what is what. Bitcoin is a, 100% digital currency. It's software that can be sent to and from people without any bank or company or intermediary in the way. So it's a completely neutral, decentralized form of money. So with that kind of out of the way, what problems can Bitcoin solve, and what problems can it not? Because I think you hear a lot of people talk about Bitcoin solving all the world's problems, and I don't want to sit here and pretend that Bitcoin can do everything. I definitely am a very pro Bitcoin advocate. Learning about it only a couple of years ago, I fell deep into the rabbit hole, and I'm loving learning everything about it and everything outside of it in the crypto space. But some problems in the world are human problems. They're not they're not money problems. They're not technology problems. And we would be kind of naive to think that the Bitcoin can solve all of them. But I really do think that Bitcoin, due to the way it's built, with its kind of the rules of the software baked into the protocol, into everything in how Bitcoin runs, the way that it's uncontrollable means that we can mitigate some of the human problems, like the need for power, for control, for greed. Like some of the things you just can't you can't corrupt Bitcoin in the same way that we talk about fiat or CBDCs. Like those are currencies controlled by a small group of people with vested interest, in keeping kind of sometimes the status quo the way it is. And although, like, I'm sure a lot of people do have good intentions for banking the underbanked, we do see, even in the limited examples we have of CBDCs out in the wild, we don't have great examples, but the digital yuan at the moment, we can see kind of the dark side of CBDCs and, how it can be controlled, how the government can say, no, you can only spend your money on this. You can only spend up to this much amount, and we're going to track every single transaction you do. With Bitcoin, you do have complete freedom over your own money. And with that comes control and power and more equity, because if you are being told by a government that you can't spend your money on, we saw an example in Lebanon last year, right? Like when the banks literally closed down, people couldn't withdraw their money to pay for life-saving surgeries, to pay rent, to buy whatever they needed to buy, because hyperinflation meant the bank just shut down. With Bitcoin, you have control. You can do what you want with it, and therefore, like, you have control of your own financial future. So I think that's like a really big benefit of Bitcoin, is that control piece.
Mm-hmm. All right, gentlemen, any of you would like to jump in with your perspective on that? Thank you, Millie.
Hi, Andres. Yeah, I'll just jump in to kind of like add to what Millie said. And it's kind of like an extension of what I I talk about in my own class when I was giving a lecture about cryptocurrencies and also what Bitcoin in general is. So I came into this space in about 2015, and I fell in love with the concept of Bitcoin, and I always ask and when a lot of people during my lecture kind of like ask me what Bitcoin is why is that something important, I always tell them Bitcoin is as valuable as it is in terms of what you think your value, your freedom is actually worth, right? And whenever I give that answer, people just kind of laugh, because it's very interesting that most people, or maybe we're just too comfortable, especially in a society like Australia, they kind of take the freedom that we have for granted, and we don't think too much about the fact that we could lose our freedom very easily. So I mean it's not really hyperbole when I say that Bitcoin to me represents freedom, or at least it represents a phenomenon that makes it harder, not impossible, but makes it harder for a rogue government or an entity that wants to control you to take your freedom away. So to me, if I were to value my freedom very highly, or basically to say that my freedom is priceless, then to me, that represents my answer to what Bitcoin is worth. It's priceless, if it can really fulfill its promise of making it difficult for a tyrannical or a rogue government to take your freedom away. So that's my kind of like philosophical answer to your question.
Thank you, Eric. And just maybe to comment on that, we've seen a big intake or interest in Bitcoin in Ukraine during the last conflict, where people found it as a valuable tool for maybe getting their savings or some money out of the country and migrating. David, what are your observations and comments on that topic?
Yeah, I think I agree with Millie and Eric totally. Let me say 4 things really bad about Bitcoin. Let me start with that.
Okay, well, that's going to be the next question, but you're leading the way. Good. let's start with that.
First, the proof of work is a double-edged sword. It's the best and most secure, but at the same time, it is most energy inefficient. So that's the first negative about Bitcoin. It doesn't mean that we have no solution for that. In fact, we are working towards renewable energy for mining Bitcoin, like Irish Energy from Sydney. Second thing is that Bitcoin has the worst user experience. It is not something that you have a wallet and then you can use it. It is not so easy. If you forget your private key, that's it. That's why we have the multi-party computing wallets and the intermediaries coming. So it's not true that Bitcoin can be without intermediaries. It's just that the new form of intermediaries that is more biased toward the consumer rather than biased towards monopoly and monopolists. That is what we are targeting to. And of course, in the layer 1 Bitcoin, there's no way it can become a payment system with a 7 transaction per second. That is totally not possible. That's why we have the layer 2 solutions that is being used. And of course, there's always the wrong impression that Bitcoin is trying to get rid of the intermediaries. I don't think that's true. Even Satoshi Nakamoto himself doesn't say that. It just means that the new form of intermediaries that doesn't have a hold on us, doesn't compromise our privacy, but they are less costly than the centralized monopolistic structure of the current intermediaries. So I think there are a lot of misconceptions about Bitcoin that make it very difficult for many people to see clearly the usefulness of Bitcoin. So let's come to CBDC. There are a lot of good work that's been done, for example, in Cambodia, the Project Bakun. It is not a CBDC, it's a tokenized US dollar and tokenized Cambodian real, their national currency, that
Maybe
allow.
would you mind just to clearly give us a brief definition of central bank digital currency?
Okay, I think it's important to understand what is central bank currency, central bank digital currency. There are four main points. First, it is a form of digital money denominated in the national unit. Number two, it must be a direct liability of the central bank. In other words, it can be in the hands of licensed institution to create money. Okay, third is that it complements banknotes and reserves as central bank money. And fourth is it should be accessible to the general public or provide through the wholesale network, which is among the banks themselves or the licensed institutions, or for cross-border transaction or settlements. These are the four main definitions by the Bank of International Settlement of what CBDC is. So sometimes you see like barcode, they tokenize just the money itself, the currency itself, but it's not the liability of the central bank. You cannot use the tokenized real or tokenized US dollar to create money like the bank, what the bank does. It is not CBDC. It is just tokenized currency by the government. So that in Cambodia, what they have done is that they created a blockchain, private blockchain, and it broke the monopoly of the banks. It allows any institution, financial institution, even startups, to join as a node. And the reason being that in a real-time gross settlement system of the wholesale system of the central bank, you have to have huge reserve because there's counterparty risk. Real-time gross settlement that we have now in the central bank is not instant settlement. But in the case of blockchain, it is instant settlement. And therefore, there's no counterparty risk. And when there's no counterparty risk, you don't need high reserve or don't need any reserve, just need to have a license. And that's what Cambodia has done. And that broke away the monopoly of the banks. And not only financial inclusions that they've created corporate inclusions that create jobs. Startups can now join the payment system and become a node and create jobs. So that is what is very interesting, that why a lot of developed economies do not want to do CBDC, and yet they too do not want to have any of the tokenized dollar. But what is being led is in Asia and also in the developed economies like Africa, ASEAN, China, that's leading this movement of CBDC and tokenized dollars that is happening. So the mindset is similar to Bitcoin, but very different from CBDC. So I named the four the negative points about Bitcoin. My point is this: at the end of the day, whether you're doing CBDC or tokenized money, there's only one very important point that you need to realize, which Eric has raised, which is that you cannot have a centralized server controlling money in the virtual space. Because if there is a malicious element, if there's a war, or if there's an alien that take over the centralized server, the whole country will collapse. So eventually, all the government will understand that they have to be like Bitcoin. It has to be distributed ledger. It has to be the case that there's no assets being placed in the financial institutions, but in the wallet of its people. The people must have the sovereignty of the money, not any centralized server. I think I strengthened the argument for Millie and Eric from a perspective of a government strategy of why you should never have a centralized server, but have a distributed server and ensure that the assets is in the hands of your people, because you cannot afford in a war or when an alien attack or malicious element or corporate to take over your centralized server.
That's a very important point from the point of view of security of the system, right? And as we know, as you also mentioned, Bitcoin is perhaps the most secure because it's the most decentralized. Now, when we look at the decentralization, is the matter of degree, a spectrum. How decentralized? How many nodes are good enough to be that we can say it's decentralized? Is 5 members of the parliament holding their nodes good enough versus 12,000 nodes in Bitcoin, or is that not an issue?
May I jump in? Yeah. I think it's very important when Satoshi Nakamoto designed Bitcoin. It is not just blockchain, but there's an incentive. So if you look at Bitcoin, you can control 51% or 60% of the network. There's still very little incentive for this group of people to destroy Bitcoin because there's an incentive. They spend so much resources to mine, but there's the punishment there is that you have to spend a lot of resources to mine. But the incentive is that there's a reward, and the reward is Bitcoin.
Correct. Now, what is the incentive in central bank digital currency?
So that's the major issue now that they are doing MCBDC, which is a multiple central bank digital currency to do cross-border transaction. The thing is that if you can't have this incentive, which is what Banco is about, in some sense that one of the incentives that John Maynard Keynes was trying to do is to base on the trade. Whoever contribute to the world economy, because you have more trade, you have a larger percentage in the Banco, in the formation of the Banco, so that the currency that's created is a basket of national currency below, weighted by the volume of trade that they've done. That is the incentive. So you try to export a lot more. You know, that's what Banco, unfortunately, the idea was shot down. It becomes a fractional reserve system rather than a full reserve system that we have, that led to a lot of problem now that we have.
Correct. But these are not really the incentives for the individuals, for retail, are they?
Yeah, I think you're talking about a country among the countries.
Countries, yeah.
Yeah, so it's difficult because every country has their own incentive. So my own view is that eventually they will link up, that there will be a link, say for example with Bitcoin. Okay, because Bitcoin is still the safest. There will be a door, because at the end of the day, you could link up with Ethereum, which is not so safe with proof of stake. Right? But you have a lot of smart contracts in your CBDC.
Yeah.
You will still want to have some linkages with smart contract with the crypto, and that's how I see eventually what the end game is.
I may leave either to Eric or I would, just because there were David, you raised a couple of critical points on Bitcoin. I believe maybe Millie would like to address those.
Oh yeah, I love this. And David, really great points. I think we agree on most of the things, but I did want to address, I guess, like some of your criticisms of Bitcoin, because there are some that I absolutely agree with. The user experience for Bitcoin, not just Bitcoin though, like let's be honest, it's all cryptocurrencies, DeFi, NFTs. We really need to figure that out because people have no idea what they're doing with self-custody. Decentralized exchanges like Uniswap, yield farming, like these are things like that, could unlock a lot of capital for people, but just the experience of fat fingering your way to losing all your money is actually really real, and people are in danger of doing that to themselves. So let's improve that. I know, at Cash App where I work, we're trying to make it as easy as possible, basically seamless to use Bitcoin, just like you would, cash money. So I agree on that point. We already know that layer 2 Lightning is rolling out. We're trying to make it as ubiquitous as possible. So layer 1 is your clearing layer, just like we have ACH today. Layer 2 is your payment layer. It's your Visa, it's your credit cards. So I think we can all agree that is there, and that solves that problem. On the power usage part, I think like if we call proof of work inefficient, I think we're making a judgment call on, why has Bitcoin stayed proof of work where other cryptocurrencies have moved to proof of stake, like Ethereum, right? Like it's not because they don't want to stay proof of work. They want to stay proof of work because that is the most secure way of securing the Bitcoin network. They want to stay there. And is it inefficient? I think that's like a judgment call. I think for the power usage, despite, Bitcoin mining moving, more greener and greener, I think there's an interesting use of Bitcoin mining as a way to actually improve financial equity for places. And I want to talk about this one example in Africa, in Kenya at the moment, of this startup called Gridless, which disclosure, like Block has invested in. It's a company in Africa that is essentially subsidizing new power plants in these small rural communities in places like Kenya and Uganda and places where it's really expensive to create a power plant, right? And the idea being these people in these rural communities, they don't currently have access to electricity. They don't have fridges or TVs, or there's no lights. So, students can't study at night when the sun goes down, that's it. They're all charging their phones from car batteries. It's pretty hard to think about from an Australian point of view. We're pretty privileged and lucky. But essentially, if you want to bring power to these neighborhoods, you're not going to make your money back for about 5 years, because it takes a long time for people to actually use that electricity, going from 0 to 100%, like, the actual TV light thing, fridges, microwaves, whatever electrical appliances you need. So what this company is doing is attaching Bitcoin mining hardware to these new power plants and subsidizing and sharing the profits with these power plant companies, these energy companies, until they become financially viable. So Bitcoin mining, yes, it does take power, but it also provides value. So if we can harness stranded energy, unused energy, and turn that energy into money, into value, we can actually spread that wealth a lot more than where it is currently, which is all these centralized energy grids, which is mostly, built up cities, capital cities, and not these like rural communities that actually need it. So I thought that was actually quite an interesting use of Bitcoin mining power. And the last point I think was around intermediaries, which there's always going to be companies like who can provide utility to places that need it, like Bitcoin, exchanges. But I think with Bitcoin, you have a choice. And with CBDC, you don't have a choice. You're always going to go through a government. With Bitcoin, you can look after your own money, or you can trust that money to a crypto bank or an exchange, or you can hold it yourself. There's always a choice into how much risk you want to take on there, which I think is good.
It's an interesting. Eric, would you like to add something?
Yes. Look, I'm very happy to be on this panel simply because of the fact that I get to hear all these different viewpoints and also different points that are brought up by, other panel members. Now, one of the things that I really like is the fact that, I have a little kind of like a different perspective in terms of, the so-called bad user experience of using, Bitcoin, because I kind of like see that as a feature, not so much as a bug. Now, because of the fact that I believe that, look, one of the underlying philosophy behind Bitcoin is libertarian, right? It means basically you take responsibility for yourself. You want something done, you kind of like do it yourself. You learn how to do it. And I like that now, simply because of the fact that I've noticed now, okay, I'm not going to criticize too much of my students, but it's just that I noticed that there's a large segment of students these days that are not wholly kind of like sure of their own strength. That means they have become so accustomed to things being given to them so easily that they don't really know how strong that they can be. And one of my messages in class has always been that, look, you need to know your own strength. And that is kind of like the libertarian perspective. So it's a little bit like the Lord of the Ring movie scene where, the king of Rohan touching his own sword and kind of like regain his own strength, and understanding that, look, you need, if you want to protect your own freedom, there has to be a responsibility that is, connected to that. So to me, it's like, look, there is nothing stopping anyone, right? I mean, I get that there are some groups of people that are they're not very tech savvy, but I think a majority of us is able to go on YouTube and search on the thousands of YouTube channels to basically explain to you how to set up your own Bitcoin wallet and actually how to make a transaction. It's simply a matter of motivation in terms of how much you think your freedom is worth. Now, that's one point. Now, the second point that I want to point out, which I thought is very interesting, or which I believe is something that I kind of like came to me before the panel, was about what is the one thing that I like about CBDCs, even though I'm not a big fan of CBDCs, but I just want to juxtapose, the advent of CBDCs in our current conversation about Bitcoin. Now, because I always believe that, look, in every story, you need a villain. It's like, okay, Bitcoin has been kind of like creating its own villain, but in terms of like, talking about all this narrative about self-sovereignty and things like that. But it doesn't really resonate with a lot of people because of the fact that the villain is not there, it's not very real. And I think that one of the beauty about CBDCs is that once it has been implemented, right, or when it comes about, people will really start to see, what it is all about. I'm not making this up. I'm not making a conspiracy theory. If you look at all the white papers and all those documents about how CBDCs are designed, first of all, there's no assurances or guarantees that there's any privacy features that are built into them. And also, all those documentations have been talking about the fact that they're going to tie your money to basically behavioral your behavior. That's what it is. That means basically it's essentially a tool to basically to make you comply with the desired behavior as dictated by a small group of people. That's what it is. They already told you that that's what's going to happen. But the thing is that people are not really paying attention. So to me, the advent of CBDCs is probably going to be a manifestation of an actual villain that will make people sit up and think, okay, maybe I need to, think about holding some of my value in something that is not controlled by this small group of people. So those are my 2 points.
That's very interesting, scary as well. But I see that we are having a bigger picture, and we have. It's good to have a choice always. David, what do you think? Because we've heard good things about both Bitcoin and CBDCs. Now we're trying to explore some of the dark sides.
Yeah, so I agree with Eric that people will see the negative side of CBDC as well. But I will also look at it in a very different way, in the sense that whether you're in CBDC, whether you're in Bitcoin, it is not CBDC versus Bitcoin, Bitcoin versus CBDC. Even within CBDC, there are countries which are benevolent, working for the people, working with the Bitcoin people, working with the Ethereum people to incorporate into CBDC to serve the people. There's the other extreme of the CBDC countries that would like to strengthen their monopolistic power. So let's not have I would like to urge the community not to think of CBDC as just one, and Bitcoin versus CBDC.
It's a range, right?
Yeah, there's a whole range of governments which are benevolent, or the government which is monopolistic, or they want to control the world. And then there's also in Bitcoin, there are people who wants to be speculative, there wants to be monopoly within the Bitcoin. Whereas there's another group of people who are working for the community from the first day and try to forward the thinking of Satoshi Nakamoto for financial inclusion, and to ensure that online payments to be sent directly from one party to another party without going through a financial institution. Mm-hmm. So really the group of people in CBDC should work closely with the group of people in Bitcoin, trying to create a better world. That group of people should strengthen their position by collaborating, because the common enemy is not CBDC or not Bitcoin, but the mindset of trying to control the world. And this is what we're trying to prevent, because we have to accept that Bitcoin must be inefficient in the first layer, because the efficiency comes from the second layer. The first layer efficiency cannot be compromised, because security is number one. You have to increase the cost of the hacker. And the only way to increase the cost of the hacker is to make layer one as inefficient as possible. And this is what the work of proof of work is trying to deliver. And then the efficiency will come in layer 2, layer 3. So we have to all agree that Bitcoin layer 1 must be inefficient, and anything in the virtual space must be inefficient in the base layer. This is something that we cannot compromise, because this is cybersecurity. This is to prevent monopolistic power, malicious element taking over the network. So if we understand that, then there's no Bitcoin versus CBDC. Rather is that the community of serving the people versus the community that try to control the world. And the community that try to control the world, they themselves may be taken over by another group. Could be alien, could be generative AI, could be any malicious criminal organization. So I think if we put that in perspective, then we should work closely with those governments who are benevolent and share the same idea as the Bitcoin community. That's my point.
Do you see any governments maybe agreeing on these great things that you mentioned about Bitcoin and accepting it as a kind of base layer or reserve currency on which they can then build their versions of CBDCs?
I see a lot in Africa, I see a lot in Asia, but they are all in stealth mode because there are international pressure, there's international so-called organization that you don't conform, you're not part of the community. And at the moment, they all do not have the payment system that's used enough to strengthen their position. So they're all in stealth mode, but don't be surprised that a lot of government are cypherpunks.
Wow, that's cool. I think I couldn't be better to finish the conversations as we're nearing too close to the to the end. Wonderful guest. So would you like to add and close anything with the final comments before we finish?
Yeah, I might just because I think I agree with David. I don't think there's a world where Bitcoin and CBDCs duke it out and one arise victorious. I think the most realistic scenario is they both coexist alongside each other, and I think that's actually okay because, like we've seen, and what Eric said is that freedom can be a choice, and we've seen people give up their freedom and privacy for convenience, and that's always going to happen. We've seen, Facebook and Google, like they have all our data, they know what we do every day, every minute of the day, but it's convenient, right? Like even I use it, and I'm a proponent of Bitcoin, so it's slightly hypocritical in that space. So as long as there's convenience, people are going to do what's easiest. So if we can make Bitcoin easier to use than CBDCs, then maybe it will just start to edge out that a little bit. But most likely is that we'll exist with both for a very long time.
Thank you. Eric, would you like to add anything?
No, I think, I had a lot of fun here, and I think it's interesting. And I also, despite my reservations, my strong reservations about CBDCs, because to me, a tool as powerful as the CBDCs, once it's unleashed onto the world, and the reliance on hoping that a government will stay benevolent, right? It's to me, I've read a lot of history books, and I've never seen a situation where over time, you have a long stream of uninterrupted benevolent government. That's what worries me. I have nightmares about CBDCs. I do, and I'm not kidding. But at the same time, I agree with Millie and David that yes, they will coexist. That means crypto and CBDCs will coexist, because I do understand that there are people who just will not, cross over, and we still need to have, options for them. But at the same time, I believe that each will keep. That means the CBDCs and Bitcoin and crypto will keep each other in check, in a sense that any rampant recklessness on the part of one spectrum will drive users to the other. So I think it's a good balance in that sense. Yeah.
That sounds like a healthy financial future, having these choices. David, any final comment?
I'm really glad to be here, in this panel with Millie and Eric, and I think we have a very interesting exchange. I agree with most of the things that they have said, and I have the same worry. That we cannot go into the virtual world and hoping that things will be good. The virtual world, everything is much faster. Everything will be more immediate. The impact is much larger than all of us. We can all be sucked in, and then tomorrow we turn around and somebody else is in charge. So whether you're benevolent today, even your government can be benevolent for 1,000 years, but tomorrow a malicious element take over. Overnight, the whole country can never be benevolent. So
Yeah.
that's something that we need to bear in mind, that with the new technology that Satoshi Nakamoto has given to us, we have to make the best use to ensure that we continue our mission, to ensure that in the virtual world, we are not slave to that. And with generative AI, we should be even more guarded.
Thank you so much. Wonderful speakers. Please, everybody else, if you haven't read yet Satoshi Nakamoto white paper, please do. Many times. It's just wonderful read and very enlightening. Thank you so much. And the warning about the digital world is a good segue to our next panel on metaverse, marketing and metaverse, with a great group of interesting speakers whom I will introduce in a second after a very short break. Thank you again, Millie, Eric, and David. I appreciate your presence. Thanks.